Will rising mortgage rates finally begin to deflate the housing bubble? Or is demand too strong? Will home prices keep rising? Hey, everybody, it's JJ. You're watching Bull, Boom, Bear, Bust. It's Wednesday, March 10th, 2020. We haven't focused on housing in quite a while. We've spoken about it in various different videos, but we have not did a video exclusively about housing in probably a few weeks. So we've got a bit to catch up on. But let's go ahead and get started because there's a lot of good new information and news out here that's going to tell us the direction of the housing market. Now, first of all, what's happening in general? Well, lending is continuing, even though now is a very, very risky time for banks. Normally, it would be a risky time. But what have we been reporting on here? Government-sponsored entities, Fannie Mae and Freddie Mac, now are doubling up on their backing of these mortgages compared to a year ago. As a result, or part of this is causing a record rise in household debt with record-breaking rise in mortgage loans, right? So it's no coincidence that government-sponsored entities or the money printers come in and back twice as many mortgages as they did a year ago, and now we see a record-breaking rise in mortgage loans. Right, along with the record-breaking rise in mortgage loans, consumer debt totals now 14.6 trillion at the end of 2020. We're going to see the end of the first quarter numbers here probably in a few weeks in early April, but we know based on the latest report that debt is continuing to skyrocket. And remember, debt and lending are the key to keeping demand high for housing. Mortgage debt surpassed 10 trillion for the first time and rose at the fastest pace in the fourth quarter since 2006. The quarterly increase of 182 billion culminated a year in which homeowners took advantage of low rates to refinance and as city dwellers moved to the suburbs. Okay, so we have to talk about that too. We did see just a record-breaking demand in homes out of the larger cities as the work from home craze kicked in because of the virus and a few other reasons while people were choosing to leave larger cities. And were most of these cash buyers with huge amounts of savings and money in the bank? No, most of these people had to go out and take on loans. Therefore, you see the biggest rise in mortgage debt in over 14 years. Right? You also had the cash out refi craze where people with home equity because of the rising home prices were refinancing and taking cash out. That's another big reason or another push for these record rise in mortgage debts. Will rising mortgage rates finally start to deflate the housing bubble? Well, MarketWatch is asking this question. Mortgage rates soar above 3%. How high can they go before they scare off home buyers? Well, there's plenty that can be done to offset the risk or the pressure of rising mortgage rates. For example, the money printers can come in and back even more loans, and therefore the banks get basically a guarantee to keep loaning money. Therefore, they can continue to loosen the underwriting guidelines and loan to people with lower and lower credit scores, lower and lower down payments, worse credit history. So yes, there can be plenty done to still prop up this market and offset the rising mortgage rates. Why? Because you have an endless money printing machine behind the scenes. It's 100% manipulated, so prices can keep rising if that's what the money printers decide. It's that simple. The 30-year fixed mortgage rate averaged 3.02% for the week ending March 4th, up 5 basis points from the previous week, Freddie Mac reported Thursday. It's the first time since July 2020 that the benchmark mortgage rate has risen above 3%. All right, so rising mortgage rates, yes, they are a concern, but keep in mind it's all manipulated and easy money behind the scenes. Let's take a look at a Fed chart here. This is the 30-year fixed mortgage rate, and we're looking at a 1-year chart. So you could see even with the recent rise here in the past few weeks, we're still way below where we were 1 year ago. 1 year ago, we were about 3.3%. All right, now on a longer term chart, you can see the rise here at the far right is barely noticeable. We're still, currently we are still right around all-time lows in mortgage rates. Okay, and if you look back, we've seen periods where rates did begin to rise, but ultimately they go even lower, continue on to new all-time lows. So even after this current surge, would you be surprised if rates hit new all-time lows here this summer or maybe this fall? I wouldn't. Remember, the money printers, the Fed, they can come in, they can buy mortgage-backed securities, endless liquidity for the banks. This housing bubble can get bigger. If that's what the money printers want to do, is that what they want to do? Well, you let me know down in the comments. Okay, it's still my estimate or my analysis or forecast that ultimately there's going to be a reason for the plug to be pulled on this endless liquidity, and we're going to see massive deflation. But if the money printers decide otherwise, they could continue to make prices rise. I'm not here to tell you exactly what's going to happen. I'm just here to tell you how much manipulation is done behind the scenes. That way you can do your due diligence and decide, what you think the money printers are going to do. This market support is really working. Homes sell closer than ever to list price as average sale to list ratio approaches 100%. Closer than ever, right? This is a all-time high as far as homes being sold close to list price. And in some locations, you're going to have bidding wars and home prices going way above the list price, which is pretty frustrating if you're a home buyer, especially a first-time home buyer on more of a strict budget, and you go in and put in an offer for full price only to get outbid by someone else that took out, in most cases, a bigger loan than you did. Nationwide, the median home price sale increased 16% year over year to $323,600, another new all-time high, and that's the largest increase on record in this data set, which goes back through 2016. Also, pending home sales are up 18% year over year. Nationwide, 55% of homes that went under contract had an accepted offer within the first 2 weeks on the market, and that's well over the 44% rate during the same time this week 1 year ago. All right, so demand is picking up, bidding wars are increasing, record home price rise, record rise in mortgage debt, all happening at the same time. No coincidence. All right, also we have to talk about this, as always, mortgage forbearance. Has it ended? No, it's still happening. FHFA extends Freddie Mac and Fannie Mae single-family eviction and foreclosure moratorium. I'm wondering how many landlords are just wishing they would have never bought their investment property. The ones that are not getting rent right now, we've spoken about a few different stories about how stressed out some of these landlords are getting, actually committing crimes in many cases to try to get tenants out of their homes. Well, I'm wondering how many people or how many homeowners and landlords would be selling their home right now if it were not for the moratorium. They're not getting rent in many cases. And that could be tens of millions of homes that would be put on the market for sale if homeowners, including landlords, did not have that protection. So imagine what that would do to the housing market. Currently, the moratorium on evictions and foreclosures for single-family homes is through June 30th. My guess is that they will extend it beyond June 30th, again, as really there is no economic recovery. This whole facade of an economic recovery is put in place by lending and debt and spending. Also, you have the $1.9 trillion stimulus package where money's being handed out like never before. Record rise in national debt also to keep this fake, phony, false market propped up. So just extraordinary, off the charts intervention into this economy, into these markets. So more of the same, but more records being broken here for debt and the rising prices. That's going to be all for this update here. Let me know what you guys think down in comments. Thank you for being here, for supporting this channel. Hope everybody's doing well. I'd like to hear your comments on this housing market and the support that's being pumped into the system here in housing. Stay well, stay safe, stay prepared, everybody. Bye for now.